Can I ask your brains, pick your brains almost about where you feel what's going on in finance at the moment and how that almost impacts the startup landscape? Because obviously we had Silicon Valley Bank kind of go under and they got saved in the UK by HSBC. But then there's Credit Suisse and I watch a lot of Bloomberg. And it's that balance of where 2-3 years ago, it seemed like it wasn't mega difficult to raise investment if you had a good idea and a good business. Do you feel that the world has changed a bit? Are people a bit more cautious now than they were in the past?
Great point. By the way, Silicon Valley Bank, we've got data on thousands of UK startups, and in the shareholders agreement, when you do a funding round on seed legals, you put your bank details so that the investors can send you their money. But by looking at the sort code, we can see what banks people use. And I can tell you, on early stage UK startups, just 1.3% of companies use SVB. Starling is the most popular by a long way. So, the whole fuss about SVB was about larger companies, not smaller ones. And for the average, it's not to say it's not significant. And I'm delighted the government worked full time over the weekend to get it sorted. It would have been very bad otherwise. But for your average startups, they go SV who? So, but there is a fundamental issue, and the fundamental issue is the cost of capital. So once upon a time, not that many years ago, your money was earning 0% interest in the bank. So because you're earning nothing in the bank, you could easily borrow money and you would want to get a return. So you would invest in startups, which have a risk. But now if the bank is, costing you 8%, which means your money is doubling every 9 years, or the amount you owe is doubling every 9 years, if you're investing in a startup, you want to invest at a lower valuation so that it doesn't have to rise as much before you make a return, and you want to pick the ones that are more likely to succeed so that you reduce your risk. So the fundamental thing that's changed, in my view, is the cost of capital. It's more expensive to borrow and you would get more in interest. Therefore, you're going to take smaller and less risky bets. So with that in mind, investors are changing their strategy. They're pushing valuations down and they're picking safer bets. And the safer bets are usually things like fintech as opposed to B2C businesses or social networks. So if you're a fintech with a SaaS recurring revenue business model and all the jargon that's hot with investors, then probably not that much has changed. In fact, there might be more money moving to your area. You may have to raise at a lower valuation. But if you're a bit off-piste, then you may have a much harder time getting investment because you're competing with much safer bets potentially.
Because this, for me, in some ways goes back to what we said right at the start, where in the 80s, 90s, 2000s, if you ignored certain bubbles, you had to build a proper business first. Does that make sense? And it's almost where, are there zombie companies out there that maybe, borrowed money extremely cheaply, they grew, but not profitably. And when that tap gets turned off, could they be in trouble? It's almost
that's exactly it. And that's the other part that's changed, which is, and it becomes, by the way, a running joke with me and my business partner. So, often having a co-founder is very useful because you have different views on the same problem. Sometimes you're in sync and sometimes not. And, over the years since we've been around, which is like 7 years at Seed Legals, we joke, which is, for me, we should raise tons of money and grow like crazy. And my business partner, who ironically is the investor, serial angel investors, don't do that. Do not be on the treadmill of having to keep raising or you're out of business. Get to cash flow break even. In other words, not burning a huge amount of money. You don't have to aim to be profitable, but not losing a huge amount, so that you're not beholden to investors. And during the boom times, I go, Laurent, I was right. It's crazy. We should have raised tons. And then along came COVID and Brexit, and then everything went south. And then Laurent would go, see, Anthony, I was right. So, but what has fundamentally changed is investors are looking for companies that are cash flow break even / profitable, not losing huge amounts, because they know if they're investing and you need to then raise
Hmm.
tons more
Hmm.
at a lower valuation, they're going to be diluted,
Yeah.
and so underpinned by the changes in the cost of capital, you now have big mood swings from investors. Um, and then the question is, how long will it be until they correct it? I think one of the other side effects is that because valuations are down, investors know the companies often, not exclusively, but often fundraising now are the ones that are forced to fundraise
Got you.
rather than the ones that can do it because they're awesome and want to. And of course, the ones who just want to and are really awesome will anyway. But the fact you're fundraising and calling investors might mean that they are dictating the
Got
terms.
you.
And then the question is, can you hold out till, is it Q3? Is it Q4? Is it next year? Is it next month? No one really knows, what the holding period is until it comes back again. But historically, everything is always a cycle. And so for
Hmm.
sure, the cycle will be back again. The question just is how long?
So if you were me or a startup founder and you could wait until next year to fundraise or whenever, would you, or would you raise now because you never know what's going to happen, even though it's at a much lower valuation?
Of course. So it's a great point. And the rule one with startups is procrastination is death.
Okay.
So, you have a dream, you want to do something, you're either going to get on with doing it or you're not. And if you don't, well, it depends if how passionate you are. But if one day you wake up and see someone else who's going to do it or is doing it, will you be endlessly annoyed with yourself or will you go, meh, whatever? So, I mean, the fact is, if you are going to be, if you think about in some number of years of development, I want to have a company that's worth 100 million pounds and do X or Y. Well, the question is, when does the clock start? If you're not starting now, it's just going to start later. And if you're not laser focused on growing it as efficiently as you can, then you're wasting everyone's time, really. So I think it's one of the key attributes as a founder is when there are uncertain times, you take
Hmm.
advantage of it. So you change your fundraising strategy, you pick something that's perhaps more investable,
Hmm.
you look to raise smaller amounts and get there. Instead of hiring 8 people on day one, hire 4 people or build something yourself or use no code
Hmm.
to get there. Instead of trying to do a funding round and raising 500,000
Hmm.
pounds, get on seed legals and use what's called a seed fast to raise small amounts ahead of a round. So you don't need to wait months trying to find all the investors to come together. You get a few investors.
Hmm.
If you had £20,000 now, you could get the prototype built. Or if you had 50,000, you could hire the developer.
Got you.
So it's all about changing your strategy, working super hard to find investors, and that's being completely shameless, spreading on social, friends, customers, whoever will listen, what you're doing and why they should invest, and your pitch deck and business plan, and telling them
Hmm.
about the SIS tax savings. So, I think that not going ahead is not really the answer. Because the other thing is, you always think that something will be better, but guess what? When fundraising valuations are increasing again, all that's going to happen is all the companies who are much further developed that didn't
Yeah,
fundraise will
yeah.
be right at the front of the queue, and you'll realize now is a lousy time for you. So there's always a lousy time. Maybe the corollary is things will always be worse. This is as good as it's ever going to get. There goes my optimism award.
No,
Okay, yes.
I love it. I love it.